According to casual observers of the real estate market, the sky is falling now that the 30-year fixed mortgage rate went above 5%. And it'll probably go higher, let's be honest, because that's just the way the market is going. And I could show you charts and graphs to explain why the market's going to be just fine and why we'll be just fine. But I'd rather use two wheels. In 1974, when Bob Dylan recorded half of the songs for Blood on the Tracks in this building right here, used to be Sound 80 Studios, the average rate for a 30-year fixed rate mortgage was 9%. In January of 1977, the last time the Vikings appeared in the Super Bowl, rates were slightly lower at 8.72% for a 30-year fixed rate mortgage. In 1982, when the Metrodome opened, rates peaked at 17.5%. That's like credit card interest rates. In 1987, when the Twins won their first World Series as the Twins, rates were still above 10%. But by 1991, when Kirby Puckett extended the series with his heroic Game 6 home run, rates had finally dropped below 10% to 8.86%. In 1993, when the Weissman Art Museum opened, the average 30-year fixed mortgage rate finally dipped below 7%, but only for a few months. Mortgage rates fluctuated between 6 and 8% until 2003, when we saw them hit the 5s for the first time. That was the same year the Mill City Museum opened. In 2006, when the Guthrie moved next door, rates had climbed back up into the 6s and would stay there until 2009. Rates began to plummet in response to the Great Recession from about 5% in 2009 to 3.5% by 2012. In 2014, when the Green Line of the light rail opened, rates were just shy of 4%, and that began to feel like a normal mortgage rate, fluctuating between the high 3s to the high 4s until 2019. And then the pandemic happened. In August 2020, an aggressive monetary policy to keep the economy afloat during the pandemic drove the 30-year mortgage rate below 3% for the first time in our nation's history. The point is that even though rates have gone up, they're only high compared to the last 2 years. Of the last 50 years, only 15 years have included average 30-year fixed mortgage rates of less than 6%. A jump this quick is also unprecedented in the last 40 years, so it's impossible to say exactly what will happen to home values and the fast clip that our market has been moving at lately. But I do know this: home buying is an emotional decision more than a totally logical one. Buyers purchase homes based on their needs, not whether or not a purchase is perfectly timed. Those needs are moving to a new city, getting married, having kids, having more kids, job relocations, downsizing, and other life changes. So rising interest rates will likely cause a lot of buyers to shop in lower price brackets, but it won't keep them from buying altogether. I am seeing some anecdotal signs that the market is slightly less crazy than it was 6 months ago, but all that means is we're seeing 4 or 5 offers in a bidding war instead of 10 or 11. So if you're a seller, it's still a good time to sell. And if you're a buyer, all indications are that prices will continue to rise this year. Fannie Mae predicts another 11% average price appreciation in 2022, and there are no indications that mortgage rates will go back down significantly. So while buying might cost you more now than it did a couple months ago, it will likely cost you even more to wait.